This conference will now be recorded.
Hello, this is the second section of the Certification in Advanced Hospitality and Tourism Analytics, the CATA. The second section is how to conduct a market study. So let me share screens and we will get started. How to conduct a market study. Now, remember, this is the condensed, the abbreviated version. There is an expanded version which goes into even more detail. So if you are using the market study as your project, in addition to this, you definitely want to get the expanded version as well, because those are the more specific guidelines of how to create that project. But this is a really good coverage of a market study and covers almost everything that we need to know. So here's our table of contents for this section. We're going to learn the various components, and then we'll go through the major components listed here: general makeup, current stats, trended data. There are a few in here that are optional. No, those are in the extended version. But we'll be looking at all these different chapters as we go through this particular section. First, let's define it. What do we mean when we say a market study? We say it's an analysis of a group of hotels to provide an overview of the hotel industry in a specific area and to share insights about those hotels. In other words, how's that group of hotels performing? What makes them unique? The group of hotels is most often a geographic area and will be focusing on a market, in other words, a major city. Now, there are some cities in the world that are smaller. We recommend you stick with a larger city when it comes to your project. And in some situations, we may have to do a market study on a smaller city. It's possible. It's just a little different. In other situations, a market study could be a larger group. It could be a whole country or a continent or a subcontinent. And that's very interesting. It's a little variation than what we're doing, but it's not that different. It could be a special group of hotels. When you're actually working at a company, it could be your own hotels, your portfolio of hotels that you're responsible for. So could be lots of different things, but we're going to focus on a market, a major city. Now, when it comes to the components of each of the 4 research projects, the PowerPoint's going to list all of the components of a comprehensive study. This PowerPoint will be covering the components of an abbreviated study. It's a few less components. The training will separately list the components of a very brief market study. If a professor may want to assign that as an application or an exercise, even though the students are not covering that in their project, but it is possible. So remember, the separate expanded PowerPoint demonstrates all of the components of a comprehensive version. You want to look at that if you are doing the market study as your project. Now here's the list of the comprehensive market study. You'll notice there are 14 different components. Some of them are a little grayed out. Those are going to be the ones that don't get covered in this one, but do get covered in the full version. Here is an abbreviated version. These will be the ones that we're covering in class. And then this is a much briefer version, which you could do as a project or as an exercise, I mean. So first, the first component that we're going to start with is the general makeup of the market. Now, to do that, we're going to utilize a type of report that we've seen before. It's called a property and room count. Now, these are valuable. We use these in the very first section of the CHIA. They provided size and structure information about the organization of the hotel industry in a geographic area. They're going to show number of properties, number of rooms, They can subtotal by various geographic and non-geographic categories, and then have a total for the whole market. The counts here are going to include numbers of hotels and number of rooms for two different categories. First, for census. Now, that refers to all the hotels that are in the STR database. We have about 250,000 hotels throughout the world in the STR database. Every hotel we can find, we continue to work on that every day, but generally every hotel that has an internet presence will be in that database. There will also be counts related to sample properties and sample rooms. Those are the hotels that submit performance data, that's the occupancy, average daily rate, and RevPAR type data to STR. We get data from about 70,000 hotels, so about 250,000 census, 75,000 sample. The sample counts are important to emphasize. It does show participation. Anytime you get a report from STR, you'll be able to see the sample, and a response page will even show you the specific hotels that do submit data. For example, if a market has mainly high-end hotels participating, then the performance data will be more swayed to those types of hotels. That will be something the sample will show you. Now, when it comes to market makeup, at a minimum, obtain a property and room count report for your market with 4 different tabs: by submarket, by class, by scale, and by chain. Now, you could also get parent company. That could be informative as well. So 4 or 5 tabs, different counts, and typically when we generate these, we put them all into one spreadsheet. Keep in mind, difference between scale and class. Scale data will have a group for the independents, where class will have the independents combined in with the chain hotels. Now, this property and room count data excuse me, can be displayed 2 different ways. It can be displayed in table format or by using bar graphs. Now, we don't recommend using both. Pick one or the other. I'll show you samples of both. Groups such as brands or parent companies could be sorted in order, usually by number of census rooms. So you see what the largest brands are or what the largest representation by parent company is as well. But turn it around so you're going to sort by largest to smallest if you do sort these in order. So here are some property and room counts related to Nashville. If I requested this from STR, I would get a Excel spreadsheet with multiple tabs, and here are some examples. The first tab has submarket data, the second tab has scale data, and the third tab has class data. So those are 3 different tabs in a property and room count. In addition to that, I'll get a 4th tab with chain data, and notice this one I have sorted by census rooms, large to small. And then a 5th tab for parent company. So you see the parent companies represented. Again, these are sorted by census rooms, large to small. With that raw data, I am going to create some tables. And again, the slides here can be used as templates when it comes to creating the tables here and when you're working on your project. The Nashville market has 6 submarkets that are listed there, and you'll notice you're looking at census properties, census rooms, sample properties, and sample rooms. Now, I put the note on top of that, but they're behind the scenes if you delete that note. And very easy, copy and paste that data in. If there are more than 6 markets, you're going to have to add some rows. If they're less than 6, you're going to have to delete some rows when you're copying, pasting data in for your market. Then you're going to take a look at the data. That's the note, what the note's referring to. Notes at the bottom, typically, we recommend putting notes at the bottom of the slide. That helps you remember the point you're trying to make. For example, in Nashville, the largest submarket is the central business district at 14,000 rooms. The second largest is the airport at close to 12,000 rooms. The others are much smaller. So add your notes at the bottom, easy way to remember it. You're communicating it to the audience, but it also makes it very easy when you're doing your presentation. You don't have to have flashcards and remember when everybody can see it on the screen. Here's another table. This is by scale. And here we have 7 different rows, no surprise. The hotels subtotaled by scale, number of rooms, number of properties, census, and sample. And you look at this data for your market when you copy and paste it in and make observations. For Nashville, we learn upper upscale is the largest group, then upper mid-scale. So we make those notes at the bottom. Here are the properties and rooms by class. Same kind of table. Just be creative. We use different colors just to demonstrate. And again, we're looking at this data and making various observations. Now, when it comes to data by chain, instead of using a table, I'm going to use a bar graph just so we show the representation. We graph the number of census rooms for each of these brands, sort again from high to low. And we're looking at Gaylord at the top with almost 3,200 rooms. Hampton is the next at 23, Holiday Inn Express at 19, Courtyard, then Hilton Garden Inn, and all the way down. I picked all the hotels all the chains that have more than 600 rooms as of the current date. So graphs can help you visually represent this, and but keep in mind you're only seeing census rooms. You're not seeing census properties or sample. But it is a way to demonstrate that. You could use the same type of graph for parent companies. So if you want to graph parent company, make another copy of this, copy and paste, bring in parent company. And again, there won't be as many parent companies as there are chains, so you'll delete a bunch of those rows after you do that. So current makeup uses the property and room count data, creates some tables, creates some graphs. And the whole point here is you're giving your audience an understanding of what this market looks like. How does it break down by submarket? How does it break down by scale and by class, by chain and by parent company? Then we move to the second component. The second component has to do with current statistics. What do we look like? A snapshot of performance data as of right now, last month. So current stats, a snapshot, just like I said, we're going to be displaying a range of metrics in this particular, and we're just going to use one slide mainly. We're going to show actual values and percent changes for the key performance indicators. That's the occupancy, the average daily rate, and the RevPAR, as well as the raw data values, the supply, rooms available, the demand, rooms sold, and the revenue. Now for this, we're normally going to display running 12-month data because that's going to be a historic trend. You'll get that from tab 6 of the trend report. We've been there before. The year-to-date or annual data can be incomplete depending upon the calendar and what the current month is. So running 12-month data is always the safest, and we have to make sure that the audience knows exactly what data we've shown. Now to get this for the last month, the running 12-month metrics for the current month are at the very bottom of the trend report. So you're going to go all the way to the bottom. In our case, it's May of 2020. So we'd be getting April 2020 data just last month, and we'd go to the bottom. That would be the same for whatever time period you're looking at. Now, the metrics will be at the bottom of the running 12-month tab. The number of hotels and rooms you're going to find somewhere different. I'll show you where to find that as well. But here's the running 12-month tab, and I'm going to go to the very bottom. If it was November of 2019, I'd get that bottom row, and I'd get the metrics on that bottom row. So we're going to use that data in just a minute. Notice I've highlighted all of those metrics at the bottom, 73.7, 0.7, 150, and so on. We'll get them in a minute. You can also indicate records when you're showing the current snapshot. In other words, the data that you're looking at, like the occupancy and the average daily rate, are those historic records? In other words, has there ever been a higher occupancy or a higher average daily rate at any month in history? If not, you can indicate this is the highest all-time ADR, or this is the highest all-time occupancy, or rooms available, or rooms sold, or revenue number. Also, we want to show the exact number of hotels and rooms that are in the market as of the current month. Now, you can find this data. This data will not be on the running 12-month page, but it will be two other places. It'll be on tab 12, the raw monthly data tab, and it'll also be other places, but that's the best place to find it. The columns on the very far right of the tab will display the census numbers of census properties and rooms, and we'll take a look at that. Here is the raw data tab. That's monthly data. We're going to go to the very bottom of that, the current month. In the case of the training, it's November of 2019. And at the right-hand side, you're going to see census properties. As of the current month, there are 403 hotels in this market and 46,831 rooms. So that's found on the raw monthly data tab, not the running 12-month tab. So here's the slide. Now, this is the one you're going to copy and paste to show current key statistics. We note the description there. This is based upon running 12-month data ending November 2019, or current month, whatever it is. And then note, it says supply, demand, and revenue are annualized because this is running 12-month data. So let's look at what we're showing. We're showing the number of hotels, that's 403. Now notice the asterisk, that is a record for this market. There have never been more hotels for this market than right now. The number of rooms, 46,000, that is also a record. The room supply, 16.7 million. That comes off the running 12-month page. Let's go back and take a look at that. Oops. That's right down at the bottom, 16.7 million. And notice the demand is 12.3 million. So those 16.7, 12.3, that's right there, supply and demand. Occupancy comes from the 12-month tab, 73.7, ADR 150, RevPAR 111, and room revenue at 1.9 billion. Now, just so happens for this market, many of those are record highs, not occupancy. Occupancy was higher at some point in history, but the others are records, and that is so indicated. In column 2, we're going to put in the percent change values. Now, those percent change values are right next to the actual values, and you'll see occupancy percent change 0.7, ADR percent change 2.2, RevPAR percent change 2.9, 7.4, 8.1, and 10.5. And those metrics will copy those percent changes and put them there as well. You see all of those in the second column. So that's it for current stats. That's just a quick look at where we are right now. Again, it's based on running 12-month data, and we are noting historic records. Good. The third component of a market study has to do with trended data. Now, we've seen a current snapshot. At this point, we're going to drill down into historical data. And to do that, we're going to display that data with line graphs. Those are the best way to visualize historical longitudinal data. We are going to use the running 12-month data for this. Remember what you learned in the CHIA, that removes the seasonal distortion. So you won't have the zigzags, you'll have the long, undistorted lines that show the trends. Remember, the running 12-month data is found in tab 6 of the trend report. And for this, we're going to display key performance indicators and raw values. We're going to show percent changes, that'll go positive and negative, plus we will also show actual values. As we're graphing this data, we're going to highlight trends over time. We're going to note highs and lows. We're going to indicate average slopes, sharp slope, gradual slope. We're going to show changes from start to finish, or from highs to lows, returns to prior peaks. We can use dotted lines when we graph this data. Now, certain metrics are typically graphed together. Typically, we'll graph supply and demand together because they sort of relate. And then occupancy and ADR will frequently get graphed together as well. Be careful of using more than 2 lines in a graph, 2 or 3 at the max. If you use more than that, your graph's going to start looking like spaghetti, and it'll be hard to follow the differences between the various metrics that you're trying to visualize. So one more time, we're back to the 12-month moving average tab, and we're going from the very start down to the finish. This is just one small portion of that. And here is Nashville data. Now this graph goes all the way back to 1990. For this particular city, we have data back into the 80s. For the city that you're working with, you may not have data back that far. You may have to delete some lines from this template before you copy and paste the data in. But you'll see the slide here has a red line to indicate supply percent change, a yellow line to indicate demand percent change. We have noted the downturns, the recoveries. The red line, we actually note a flood, and that happened, a historic event in 2010 that closed a lot of rooms, as you can see there. We indicate some of the high points, some of the low points, and then the current supply and demand, and these are percent changes, remember, not actual values. Here are the actual values, and we show supply and demand. You looked at this one before. We saw the supply gradually increased over time, a small dip during the flood. Demand increased throughout most time periods, but during the recession, it did dip down a little bit and then recovered about a year later. So that's now going up. And if you notice at the end of this time period, in the 2019-20 time period, you'll note that the supply, the red line, actually has a sharper increase, sharper slope than the yellow line. So that merely means more hotels are being built than new rooms being sold. And we'll see the evidence of that in just a second. But the first 2 graphs here were supply and demand percent change, and then supply and demand actual values. Now, next up is occupancy and average daily rate. Of course, they'll be found on the running 12-month tab as well. This first one graphs the percent changes over time. And you're going to see occupancy and ADR, occupancy in blue, ADR in green. Now you'll see ADR increased at most points in time during history. There was a small point in time in 2002 where ADR was negative, and there was a small time in 2010 where ADR was negative. Occupancy has varied a little bit more. It went down in the 2001 time period. It went down again in the 2009 time period. And you'll notice occupancies did dip a little bit in 2018 and just have recovered ever so slightly going into the current time period. That's the occupancy and average daily rate, percent change, and here are the actual values as well. If you look at the green line, the ADR continually increases over time. The only time it stopped increasing was during that 2009 time period, where it just leveled off and became a little flat, and then picked up recovery and has continued since. When it comes to occupancy, note that the 2009 downturn was much more significant from an occupancy point of view to an ADR percent point of view. Now you'll notice that the occupancy rebounded very quickly, rose beyond the 2007 peak, and then even rose beyond the 1995 peak to be at all-time record high. So both of these are generally in all-time record highs, both the occupancy and the average daily rate. So that's historical data. Notice we have three graphs: supply and demand percent change, supply and demand actuals, OCC and ADR percent change, and OCC and ADR actuals. So 4 graphs basically for this section. Next, let's look at market breakdowns. And we sort of alluded to this before because we pulled the property and room counts and looked at tables. And now we're going to look at the performance information for these various subsegments as well. So we're going to be drilling down into subsegments here. We can look at the data in the subgroups using geographic and non-geographic categories. So of interest to us will be data by submarket. Now keep in mind, sometimes people may call that tract. That's the old term that meant submarket is equivalent. We can also look at that data by class or by scale, and we'll see how that looks. And then other possibilities as well, data by location or size or age or type, lots of other possibilities that you can do on your own. Issues related to categories. If a single category is not sufficient due to participation, then you have to leave it out, or you could combine it with another category. For example, if there are not enough luxury hotels in a particular market you're studying, you could combine luxury with the next group below, which would be upper upscale. You could do the same thing with economy hotels. Let's say economy hotels don't have enough participation. You could combine that with mid-scale or mid-scale hotels, and then you would get data show up for that. Now, when it comes to these market breakdowns, we're going to display raw data, and we're also going to display key performance indicators. For the raw data, we're going to just show the percent changes, but for the KPIs, we're going to show percent changes and the actual values. It's usually enough just to display the current data. So in our sample scenario, right now the training is related to December of 2019. In reality, when I'm recording this video, the date is 2020-05. So the date could be moved back or related to a previous point in time if you would prefer to. So again, that will be historic data. Now you can obtain the market breakdown multiple ways. You can use an industry data file, you can use a destination report, or you can generate multiple trend reports for every industry segment. That would take a little longer, not necessarily recommended, but you could. Here is an example of an industry data file. Now this gets generated by a person in the research staff. They're going to generate a file. The file will have the various segments. Look at column 2. The first couple segments are submarkets. The next couple segments are scales and then class groups. Then by location. Now location is urban, suburban, airport, interstate, small town. That's interesting data to have. You could include that. And then by size of hotel, we see various size groups that you could get data on for different size groups as well. So another way to obtain this data is a destination report. The first example I showed was an industry data file. That's probably the most convenient. If you are getting a destination report, that is one of the things that you can generate for when you're working with STR. That would give you performance metrics on a regular basis, like every month or every week. That may have all the various segments that you're interested in as well. And here's an example of one. Notice we're looking at US, the state of Tennessee, the market of Nashville, then the various submarkets, then the various scale groups, and then the various size groups. So 3 different cuts of data for Nashville. When it comes to displaying market breakdown data, probably one of the best ways to do this is using a single bar graph and then have a bar for each different category. In other words, each different submarket or each different class or scale group. Multiple bars. Now, you can use that, just don't overdo it. It can get busy. So, you could do it for 2 metrics like supply and demand, or you could do multiple bars for different years if you wanted to. And but when it comes to historic trend lines, if you're trying to show 6 different submarkets or 6 different scale or class groups, that's going to be a little hard, and it's going to be difficult for your participant, for your audience, to be able to distinguish between the different segments that you're trying to show them. So you can group segments and display 2 lines. In other words, you could put you could combine different class groups and so show luxury and upscale and upper mid-scale and economy. Or if you want, like in Nashville, there's a central business district submarket that is downtown. You could display that on a graph. And then if you wanted to, you could show the other submarkets and combine them into one. Or in our case for Nashville, you could show downtown, airport, and then all the rest. So one way or another, don't cut down on the spaghetti. Don't show too much data, or you're going to lose the folks. When you're using these bar graphs, when you're creating, we'll see one in just a minute, it's not a bad idea to include the total for the market so that the user can see where the total average is. So they may show, if you show data for 6 different submarkets or 6 different class groups, it may not be crystal clear how the average all plays out, and you can include it in your graph to help make that clear. Now, in the abbreviated market study, we're going to analyze data by just class and by submarket. And we're going to show the following metrics. We're going to show percent changes for supply, demand, OCC, and ADR. And then we're going to show actuals for occupancy and average daily rate. And we're going to display the supply and demand together and the OCC and ADR together on a separate slide. And we're going to compare the differences between the various sub-segments. For example, when we're talking scale, we're going to show, how was the downtown group differ than, or how was, the luxury hotels different than the economy hotels, or if we're talking segments, how is the downtown area different than a suburb segment? And that you'll see that in just a minute. As we're doing that, we could note highs and lows, similar subsegments, premiums and differences when it comes to these metrics as well. So let's look at a few of these. First, submarket by Nashville by submarket. We're going to see the various submarkets, starting with the central business district, the airport, I-65 North, I-24, Brentwood, and all the other surrounding areas. On the right-hand side, we have the data for the total market. So here's how all those submarkets add up to the total for the market. And of course, we're looking at supply in red, demand in yellow, and they do combine to give you the total market number. Now here's Nashville by submarket with occupancy and ADR data. You'll see the occupancies are generally pretty low, but the outstanding submarket is Nashville I-65 North. You'll notice that has a very high occupancy percent change and a very high ADR percent change. These are the percent changes. Now let's look at the actual values. Again, Nashville by submarket. And first look at the blue bars for occupancy. You're going to notice that the highest occupancy is the Nashville Central Business District submarket, no surprise. Other submarkets like the airport and Brentwood drop down to around 75. Markets like I-65 North and I-24 Murfreesboro drop down to around 70. Now, when it comes to ADRs, look at the premium. Central Business District has by far the biggest. Then Nashville Airport, the second biggest. Brentwood Franklin, the third. And then the remaining ones are the fourth and potentially the fifth groups, I-65 North, I-24, and Nashville other areas. And then here is supply and demand percent change by class. You see the various class groups in here and the different supply and demand amounts per the class groups. Big increase in the luxury data, less so for some of the other class groups. And here is OCC and ADR percent change by class. Again, a big positive number in occupancy when it comes to luxury, a bit of a negative number when it comes to upscale. Economy doing well in both categories. ADR is a little more complicated right now related to what's going on and historic events. Here's Nashville by class actuals, actual occupancy and actual ADR. We see the premiums when it comes to ADR. We see the premiums by the different class groups. Difference between luxury and upper up, $280 to $210, $70 difference, and then dropping down to upscale, dropping down to upper mid. A big jump between upper mid and mid scale. That's a slightly older product, and then a smaller jump down to economy. Now those are the green bars. The blue bars, let's look at them. The biggest occupancies in Nashville are in which group? Upper upscale class, followed then by luxury and upscale, 78, 77. Upper mid enjoys a 75% occupancy, but mid-scale and economy both coming in at 67%. So those are the market breakdowns. So think about it. We're looking at submarket data, supply and demand percent change, OCC and ADR percent change, and then OCC and ADR actuals. Then we look at Nashville by class, looking at supply and demand percent change, big increases when it comes to the luxury group of hotels. Then Nashville by class, OCC and ADR percent change, and occupancy and ADR actuals and where they're actually at right now. So that is the market breakdowns. Let's take a little break at this point, and I'm going to turn off recording, and when we come back, we're going to finish up and do the last couple sections in the market study training. So take just a break, and then we'll be right back.